Hi, everybody. This is Gary Dean, and this is our nightly report for Monday, November 21st, 2016. So we had another pretty good day today with the indexes, and one of the things that I've been saying was that most likely they're not going to stop this until we see the S&P making new all-time highs, and we are just about there. As you can see, actually, did we make it? Yeah, I think we did close above it. I'm trying to just check it out here. Yeah, I think. Well, it's new all-time closing highs. That we do know that. So this is, it's a slingshot move. Typically, they're not sustainable, but the problem is that it's really hard to pick when it's going to stop, or start going down. What we kind of know, and I'll show you going through the other charts, is the rate of say movement is starting to decline. So that's really your first clue that we could see some type of little pullback. So we are now in overbought levels here. We have a bearish divergence, but like I said, I like to see them form like this. So this would have to come down and then start to make another bearish divergence for me to really kick that in. But that doesn't mean we can't have a 40, 50 point drop start looking for that, the bearish divergence to start forming. So we're in this bearish rising wedge that we broke through it, which the market has had a very, very good time in taking patterns like this, making the chart look really, really bearish, and then shooting it back up and catching everybody by surprise. It's something that's been going on for quite some time, and this is no different. So I'm not really happy with myself that I took even a half a short position, just because momentum was going. It just seemed like it was trying to run out of steam, and then I got caught in it too. But I'm not gonna make a bad decision worse. And that's why, I'm going to wait for this market to show that it's run out of steam before I try to add another position. And the thing is that, I'm not overly bearish on this market. I'm more, just looking for that pullback. But the thing is this, and this is a little off of the technical, path, but if Trump does some of the things he does, and I think a lot of money he's trying to front run this, is if he lowers our corporate tax rate down to 15%, there's some $3 trillion that are around the world that have a real good shot of coming back into the U.S., and if that happens, that's a lot of cash to be floating around here. So, that's one of the reasons why I'm kind of like, I don't think that these could be sustainable moves the way they're going, but I'm not overly bearish on things. I'm more just trading what's in front of me, and what's in front is, we've had a massive move without really any pullbacks. And we're still within this bearish pattern, and we could be doing a back test of it. But some of the clues that it's running out of steam are the bearish divergences on the 60-minute charts. So again, it's not. This isn't something that it's hard to trade off of, because the bearish divergences can sustain like that. So I think really the earliest clue that things are starting to break down or stop going up is going to be a break of this 2181, and I anywhere from the 2181 to the 2188 in that support range right there. If they do break that, that's when I believe that we're going to have that move that could come someplace down to this level, start forming the bearish divergences on the daily chart, and then probably get a much larger pullback than some people would be expecting, because everybody's going to be bullish on this market. But that does not mean that the pullback could be quick and then we're back up again. So we have to just kind of wait it out. But the bearish divergences and the very, very overbought levels are what has me saying, I'm not sure if I really want to be looking long right here, and I do believe that we're going to get some kind of pullback. But it's it's a shortened week. I think volume's really going to start dying off Wednesday. We're probably not going to have any volume on Friday, so it's really a crapshoot on when they're going to let things go. Taking a look at the 15-minute chart, they're trading really within this channel right here, and just make it right here. So as we can see, the top of the channel is right around that 2207. So we have a pivot at 2200 and then 2207. Maybe that's an area where they decide to take a break because, again, we have bearish divergences even on the 15-minute charts here. So all the charts are looking and saying that you have to be really careful on the long side, but the market's going to go up until it doesn't, and then when it turns, it's usually everyone tries to jump out at once, so I'd be really careful. So right now, let's see what plays out tomorrow. After tomorrow, I really do believe volume's going to dry up, so we just have to keep an eye on things. And with that, enjoy the rest of your night, and I'll talk to you guys tomorrow.